Hello, this is Todd Hubbs, agricultural economist at the University of Illinois. Today I'm talking about my weekly outlook from December 9, 2019, soybean price prospects moving into 2020. We've seen a nice rally recently in nearby futures prices of soybeans, centered around the trade negotiations that have looked more promising. This is the umpteenth time that we've been what looks like close to a trade deal, and this phase one trade deal maybe going into place. It's still hard to say. There's been an announcement last week that China's going to produce more waivers for soybeans and pork. That's still a bit murky in the actual specifics of it if you have to be put forth. But right now it looks like moving into 2020, the uncertainties that have been surrounding soybean prices in 2019 are going to carry into next year, particularly the size of the current 2019 soybean crop and what's going to happen with trade negotiations in China. So I'm going to talk a little bit today about where I see price prospects going depending on what kind of scenarios play out over the next few weeks. In these graphs I'm showing monthly soybean exports and crush from the 2017-18 marketing year through the first 2 months of the 19-20 marketing year. And as you can see, exports are up over last marketing year, driven mainly by about 100 million bushels of exports to China, which is 90 million more than last marketing year. This announcement that they're going to put waivers on additional soybean imports from the U.S. is somewhat timely, considering the original waiver announcement was about 10 million metric tons, and when you look at sales and exports, we were coming perilously close to that number on November 28th. So, it holds the promise of more sales to China depending on how the trade negotiations fall out. We've also seen very strong crush. After a somewhat weak September, we saw crush pick up considerably in October. And I think when you look at the demand factors around soybean oil and the amount of livestock we got out there, even though meal prices have been a bit weak lately, I think crush is still there for the marketing year to hit the current USDA projection of 2.105 billion bushels. We need about 175 to 176 million bushels a month, which is slightly above last year's pace, but under current market dynamics, I think that's more than feasible. It really is coming down to how big the crop is and what does a trade deal mean for soybean exports for the United States. What you're seeing here is world soybean imports from the WAS reports for the last 3 marketing years, and you can see the forecast for this year is up at about 5.4 billion bushels from last year, and most of that's driven by increased Chinese imports. When you look at world less China imports for the rest of the world, it's only about 13.2 million bushels of growth. So that puts into question, let's say we get a trade deal with China and we expand soybean exports to China, and that takes away from Brazilian exports to the main world importer of soybeans. I think that puts a lot of pressure on 9 Chinese import markets, and we could see our imports to other markets, which we've picked up a little bit during the trade war, revert back to Brazilian market share as we move through 2020, which may mitigate some price rally. Now, if we do get a trade deal, I do expect there to be a strong price rally, somewhat similar to what we saw in mid-October after the production got revised down and it looked like we had a trade deal on the way. When all that fell apart, soybean prices collapsed a bit. Unlike the October rally here in central Illinois, basis is quite a bit stronger than last time, particularly at soybean processors, matching what we saw with the strong crush margins in the previous slide. So I think it's important to keep in mind, depending on how the Brazilian and Argentinian crops turn out, export competition for non-Chinese markets could be tight even under a trade deal, which may mitigate really strong price rallies that some people have forecast if a trade deal moves into place. What you're seeing here is production in the U.S., Brazil, and Argentina for soybeans the last few marketing years. And we look at 1920. After a slow start to planting in South America, it appears the crops are in good order after some timely rains. So we're going to see what the Brazilian crop ends up turning out to be, but expansion of acreage is putting them around the current forecast of 4.5 billion bushels We took 12 million plus bushels out of production in soybeans this year, which really has lowered the prospects for ending stocks in 1920. But Brazil's going to have a lot of beans out there. Now, I expect higher domestic consumption from Brazil. They're still going to need to export those beans, and it really makes you wonder, under a trade scenario where China ups U.S. soybean imports, what does that mean for imports to the remainder of the world, and what kind of price scenario are we going to see from Brazil export prices and U.S. export prices under a new trade regime? So I think it's important to keep that in mind when you're pricing soybeans in 2020. There is an upside for trade negotiations, and we could still see the crop in the U.S. come down a little bit. Right now, I think it's best to consider just minimal changes in the 2019 U.S. soybean crop, and it's really coming down to what will trade look like. The recent price rally in soybeans is a welcome relief from the bad prices we saw coming out of October. When you're thinking about pricing this year's crop and maybe next year's crop, I think it's important to take a good hard look at what could be the tops of prices in soybeans given the current world production levels, particularly in our main competitor Brazil, and the needs of China. While we might expand soybean export to China, ASF's still there, the lower hog herd is still in place, and there's a limited amount of growth in the rest of the world for soybean demand. Now, if we saw strong economic growth in 2020 for some reason, which nobody's predicting right now, we may see an expansion of soybean demand around the world. But right now, a trade deal with China, while positive and will up our exports for the marketing year, may actually mitigate some of our exports to the rest of the world and could impact crush as we move through the rest of 2020. Well, I'd like to thank you for your time. You can find my weekly outlook and daily analysis of issues related to Corn Belt farm economics at farm.daily.illinois.edu. I look forward to seeing you around the state of Illinois.